Hello everybody, and welcome to our webinar covering updates on the Academies Trust Handbook, the AAD and other points that are of note at this time, just before the audit season starts. I'm Carly Pinkers, for those of you who don't know me. I'm one of the directors at BKL and an engagement partner looking after the Academy audits.
Yep, I'm Ed Passmore, another director at BKL and another of the engagement partners on the Academy audits.
And I'm Tyler Jeffs. I'm one of the assistant managers here. I look after a portfolio of clients, as well as being a trustee of 2 Academy trusts of my own.
So, in case people don't know, so we're a firm of accountants. There's over 400 people working here. We've got 39 partners, so there's three of us currently looking after the audits. So we're one of the top 50 firms, we're quite big, and we are also a B corporation, which means we're to verify to be doing business in an ethical way.
We'll be covering, as I said before, sector updates. We're going to talk a little bit about the recent Dear Accounting Officer issued in July, and some other points of note, the Academy Trust Handbook and the Academy Accounts Direction. And please, if you have any questions, please submit them on the chat and we'll hope to answer them at the end.
So we always like to start these with a bit of an update on the sector, and it's been a bit of an interesting year, frankly. Just before the kind of start of the academic year in 23, we were not far off the back of the white paper. And then we had that interesting kind of retraction and backtracking from the Tory government. And now we're sat here in September 24 with a Labour government. And, well, interesting to see what they do. And I'll come back to the white paper and kind of what it talked about later. But it's an interesting scenario, and we'll see shortly, how the academies, how the sector's moving in terms of academisation. And it's becoming a very interesting game, given we're so many years down the line now, and we've got a government that was not necessarily entirely in favour of academisation in the first place. I think we've got some fun times to come. Ed?
Yeah, super. So talking about some of the pay rise and funding movements. So the DfE have confirmed that the teachers' pay rise and the support staff pay rises will be fully funded. There's a line on one of their web pages. Doesn't really specify how the support staff is going to work because it hasn't yet been agreed. And then it doesn't also talk about what's going to happen in the future. So I don't think we have any clarity yet over 25, 26. And that's going to come. So in terms of changes to funding, the MSAG and the Teachers Pension Employer grants are going to be rolled into the national funding formula, whereas the 16 to 19 Teachers Pension grant is calculated slightly differently, so that's going to stay outside. And I don't know if anyone's followed the Virgin Media case with the pension scheme. Basically, any decisions taken between a certain time frame that weren't agreed by the actuary are void. But we don't think that's going to have any impact on Academy Trust yet.
So it's really interesting. Every year we try and share with you some kind of stats and some pie charts of how the sector's looking in terms of academisation versus maintained still. And I think the key thing to say this year is you'll see from the 2024, we are finally over half. It's only taken, 13 years? 13 years? 13 years to get over half. So we're getting there, I guess. As you'll also see, that's still very heavily skewed secondary schools. So you'll see even more secondary schools are coming across now. So we're up to 82%. You'll see from kind of 2023 that the main movement, there is movement everywhere, but actually the more movement is in primaries, actually, as most of the secondaries have already converted. We're down to 17% of secondary still as maintained now, rather than anything else. So it's really interesting here to see that finally we're past the halfway point, but there's a long way to go. And we'll come on in a second to see kind of sizes of mats, but this really does show there's an awful lot of schools still as maintained that should the government choose to, could push into maths, and we could see some, there's still a lot of scope for most maths to get a lot bigger. Thank you. So here's how things are looking. And this is based on numbers of schools in these specific, inside these sizes of trusts. And you'll see actually most schools are still in smaller trusts. Bigger trusts are much more becoming a thing, and these graphs have slowly skewed towards bigger trusts over the years, but actually we're still majoritively sitting in smaller trusts. Now, the DfE doesn't seem to be liking this very much, and I think what we're starting to see the DfE not enjoy converters of single academy trusts. They're not really having that anymore. And they're also starting to say, well, actually, if you want to convert into a two-school map with another school, we're not playing ball with that either. They're starting to force more, 4-school maths kind of as a start, really. And it's really interesting to see how many schools that we've got per mat on average. And that's very much gone from kind of 4.48 last year to 4.88 this year. So you'll see schools maths are slowly getting bigger, but they're not very big still. Thank you. And lastly, here we go. This is now looking at SATs versus maths. So you'll see again, we're down again. From last year, we had 12.1% of all academy trusts being SATs, and this year we're down to 10.2%, and that really is because the DfE is saying, no, thank you, we don't want SATs anymore, we want everyone in maths.
I just wanted to touch on the DfE's assurance work, and the latest data we have is from the 21-22 accounts, which shows common regularity trends. You can see financial management reporting is one that's very high up on the list, and no shock as well is the related party transactions. That's also quite high up on there. I just wanted to talk a little bit about, at this stage, the Dear Accounting Officer letter that was published in July this year, looking at internal scrutiny, and perhaps if there are some areas that you might think actually is relevant to your trust that's coming up one of those common regularity trends, is it something that then aligns with your own risk register and something that then you could therefore look at in an internal scrutiny review? In the Dear Accounting Officer letter, they refer to an internal scrutiny good practice guide to provide additional guidance, looking at the key requirement of the IS provider to report directly to the audit committee. We now know, of course, that trusts with annual revenue income of £50 million or above must now either use an in-house internal auditor or an external audit firm. So they've actually taken away the peer review or a non-employed trustee option 2 for those larger trusts. That's just something to think about, and it might be worth getting in touch just with our team, just for ideas of where you may want to look into internal scrutiny work and who may be able to provide that for you. Just in terms of regularity statements, of course, there's also the point about good estates management and the fact that you're asked as a trust to confirm GEMS in your regularity statement. Good estate management means GEMS, as I shortened it before. Just a point to note about RAC. Of course, that was a large issue last year with a lot of trusts, and it is again something to think about for your regularity statement this year, particularly in relation to GEMS. And then thinking about whether you want to add some wording into your regularity statement as far as funding permits, perhaps, if GEMS has not been as well up to a level that is actually satisfactory for your trust because of funding restrictions. So it might be an idea to add some wording in to let the ESFA and other users of the accounts know that RAC or other issues are impacting your GEMS and therefore relayed in your regularity statement. Just another point to note when we're looking at common regularity trends and going into possible issues that, although on the face of it may not be an issue for many trusts, it is still something to think about. We know it's a special case for Academy trusts. We know there's the option of a VAT 126 form, but it also may be worth just speaking to our team about whether you should indeed be registering either voluntarily or because you're actually reaching that registration threshold of £90,000. And we can talk through why actually you may want to register, albeit voluntarily, if, for example, you're about to incur substantial expenditure which will generate substantial business income in the future. So that may be one reason why you might want to think about registering for that voluntarily, but it's definitely worth speaking to our team. We just now want to cover some other facts that we have in addition to those pie charts that we showed earlier. Really now talking about the reserve side of things more. So as you can see, more than 3/4 of trusts are using reserves. They are now using their reserves, which is probably no shock to a lot of you on this webinar. We also know that 62% of trusts are forecasting a deficit for 23-24. Again, that's not a surprise, I don't think, as well as the fact that for 24-25, 88% of trusts have said that the funding is not enough. Now looking at the pay rise, 1 in 5 have said that 2% of a pay, 1 in 5 have said that a 2% pay rise is not affordable, and many say that their financial situation will be worse in 24-25, which aligns with the third bullet point there, saying that 88% have said that funding is not enough for that year. So that's really, I don't think, astounding for many of us. I just wanted to now talk a little bit about the ATH, the Academy Trust Handbook. Next slide, please, and the changes that they've made in there, whilst looking at reserves in a little bit more detail. So the first point is a pretty obvious point. The guidance on the IT service and digital equipment standards has been updated, and the ICT standards basically are a should, not a must, in the ATH 2024. If anyone needs to refer to the section, that's section 1.16 of the ATH for 2024. So that's just a point of note. Really, the fact is that they know that funding may not permit for, again, like I said with Jens before, here for IT standards to be up to scratch. So that's why they have to keep it as a should, not a must, in case there are funding restrictions in that area. Looking at financial requirements, going back to reserves now and just bringing into account the points that I made on the previous slide, there is a stronger emphasis on reserve policy requirements now. Trusts are encouraged to think how to invest reserves, given that interest rates have of course increased. We know that 90% of trusts maintain at least 5% of their income in their reserves each year. Trusts also know that, of course, the board must notify the ESFA within 14 calendar days of their relevant meeting if they're proposing to set a deficit budget for the current financial year. So although 90% of trusts are apparently maintaining at least 5% of income in reserves, there is the question that always comes up at this time of year: what happens if you are getting very close to that 5%, particularly taking into account those last bullet points on the previous slide, and the fact that for this year and then going into next year, funding and reserves is becoming even more difficult than before. There's no clear guidance that the ESFA will definitely come to investigate further if you drop below that 5% mark, but the optimal level that is stated by the ESFA is, or the window that's stated by the ESFA is 5% to roughly 20%. And I always think there's an optimal level within that range of about 10 to 12%, of course, depending on the size of your trust, the fact that you may, of course, be withholding reserves for future capital projects, etc. So there's always a reason why you might fall out of A, the range, and B, the optimal level. But this is something to keep in mind, and the ESFA may come for various answers to various questions if you do indeed fall outside of that range. That's all we know from the ESFA at the moment. Just going on to that next bullet point, the EV salary sacrifice scheme, just something to point out here that actually that's been paused now. So if trusts do want to enter into a scheme from the 1st of September this year, they have to contact the DfE directly. We believe there may have been problems in the previous way of doing things that they issue. So that's the new way of entering into a scheme now, that you actually have to contact the DfE directly.
Yeah, but and picking up on internal scrutiny then, I think Cuddy already mentioned this new guidance also available, but I urge everyone to look at that. I think it's actually quite good. Essentially, it sets out what the background of internal scrutiny is, and clarifies that it's not purely financial. So it could be quite useful to run past your audit and risk committees, because they should be driving the process and deciding what they want to be looked at. But there are annexes in the back, which are excellent, setting out the terms of reference for audit and risk committees, and then the areas of coverage to be covered by internal scrutiny. And it does clarify that it isn't just financial. There's a whole list of potential topics that can be looked at. So if your trustees are nervous about getting other providers in to look at things, this should help. Get around that.
So picking up on internal scrutiny, we see quite often that people will keep internal scrutiny very much the same year on year, and that's very much not the way the DfE wants things anymore. It should be trustee led, and it should be guided by your risk register. And it's really important that the trustees take an active role in getting internal scrutiny that delivers value for money for you. Doing the same bits of testing every year with your internal scrutiny is generally a waste of money. You really want to get the trustees involved to be looking at things which are wider than, is my income okay? Is my expenditure okay? I mean, your auditors will often look at that anyway. So, see if you can get your internal scrutiny to cover other bits that are on your risk register. Thanks, sorry.
That's all right. Yeah, cool. And then moving on to the delegated authority. So these are changing slightly. So IFRS 16 is coming in for the local authorities, and because academies are not to be disadvantaged against local authority schools, the DfE have relaxed their rules around finance leases, and so there is now a pre-approved list of. Sorry, Kay, no, you don't always need the financial scrutiny. I don't think it's guided by the risk register. But anyway, so there's now a pre-approved list of approved finance leases that will be allowed. So covering IT equipment, including weirdly door entry systems, telephone equipment, catering, cleaning, furniture, bathrooms, gyms, etc., not land and buildings yet. And also the other one to watch out for, I think, is LED systems or items to support renewable activity. If the product has been sourced with support from the DfE, it's pre-approved, but if it hasn't, then it isn't. So that might catch people out. And the way that's going to work is any lease arrangements in place at the 1st of September 2024 are going to be approved, deemed to have been approved. Right. And then talking about the notices to improve. So there has been a slight widening of the notice to improve scope. So this now, as well as covering all the things it used to cover in the past, so deficits, internal scrutiny not being done properly, etc., is now going to cover the good estate management for schools. And again, the DfE have got a guide on that, which talks about the process that you need to go through. So, your conditions surveys, deciding on priorities, deciding when things are going to be done, balancing the risk and the cost. So practical guidance on that.
which ties into the point I made before about the regularity statement and what you might want to add to the regularity statement in relation to good estates management. Can I just touch on one point, because I can see there's a question on the chat.
I'll read it out. So
just in case you can't see the chat, there's a question that says, do trusts always need a financial scrutiny of some description? The answer is no, because it should of course be in reference to your risk register. But having said that, I always recommend that you have one financial scrutiny visit a year. That ideally wouldn't be in the same term that you have your audit, so not in this term. Maybe have the financial scrutiny visit in the spring or summer term, and then the other 2 terms you would have a non-financial scrutiny visit, so GDPR, health and safety, or something else relevant to your trust. That's not to say you can't have 2 financial scrutinies in the year. You could have 3 if you want, but in our experience, we feel that at least one is very useful, coupled with a couple of other visits for non-financial.
Absolutely. And going on from that, that doesn't mean you have a very standard financial scrutiny visit in that one term. You know, it can be detailed on something specific. I don't know, the way you do payroll, the way you deal with changes to your payroll, something like that. It doesn't necessarily need to be, you know, some income, some expenditure, and a little bit of basic payroll testing. That financial scrutiny visit could be really honed in on one area that maybe you had picked up on last year's audit and you think you've had some improvements on, or something you're a bit unsure about, or the trustees are a little bit unsure about how it's working. You know, it can very much hone in. It doesn't need to be general.
I think we can change those.
Yes, please.
Thank you.
So this is trying to balance out this upcoming risk matrix that we see for Academy Trusts, because I think there's quite a lot going on potentially. So the first one, the top left-hand box, is the finance risk box. So this is essentially driven by declining pupil numbers across the country, so declining birth rates, which will feed its way through the system, which is going to lead to lower funding. We also have uncertainty over how much funding is actually going to come from the government in future years. Labour's messaging hasn't been positive over the wider economy in the last few months. We've also got staff pay awards, so the government is agreeing to pay rises, and whilst they've said that this year is fully funded, is that going to continue? We don't know. We've got general inflationary pressure in the economy, which is also causing problems. So essentially, this means that your planning is key, so the budgeting process. So how often are budgets updated? Is this just done once a year, or are they updated monthly? And I think they probably should be updated every month with the management accounts. And then how do you balance your finance risk? Well, it's looking at your main source of expenditures, so your staffing. So how is staffing planned out when you have a vacancy? Is that ever looked at in terms of, do you need to recruit someone to fill the post, or can it be spread around? I mean, obviously you've got the problems that if you cut too deep, you have a whole host of other issues that arise. What's the upcoming pupil pipeline? Are you going to need to merge classes at some point? Is there any scope to reduce the PAN? All these things we need to think about. Going back to the good estates management, have you got a recent conditions survey? And do you know what was also going to need to be put into that? So the list goes on and on. IT requirements, I think, is another one. I guess that's under operations. But I think the DFE IT in schools is a key risk, because you have a lot of biometric data, a lot of information about children, and our IT networks. Is the IT environment secure? So that can then tie back into the internal scrutiny. Having a thorough audit of that might be very beneficial.
Just to jump in there, of course, you've also got possibly declining funds for the future investment into IT. So it's almost a vicious cycle, really. Windows 10 end of life in 2025, I believe, as well. So that might be a good area to look at for internal scrutiny, see how you may be able to tackle or look at some of those risks in the IT side of things without spending too much of the funds on it.
Great. So special educational needs. So essentially, there seems to be rising needs. More pupils have some kind of SEN requirement, and this is, as we know, it's the responsibility for the funding lies with the local authorities. And the problem being, of course, that local authority financial health is not good at the moment. So. Is the funding going to be there? Can you rely on local authorities to support you going forward? So the question mark. It seems to be very difficult to get pupils assessed. There's a lack of primary. I can't think of the word. Mine's gone blank.
Primary assessments or something like that.
Educational psychologists.
That's it.
So it's taking a long time to get pupils assessed. They get kids, in the wrong settings for longer. So the problem potentially just gets worse and worse, and other ways to manage this without going down the special school route, especially if there's not places in the special schools. Operational, yes. So this is we talked about ICT a bit. Also, going on ICT, there's a risk of cyber attacks. So vulnerable networks. So we're seeing more phishing getting through. More certainly in the last few years.
Gift card scams at the moment. Really big on gift cards.
Yeah.
Always emails. Can you buy me some gift cards? No.
So what training has been given to staff as to what to look out for. I think some of the frauds seem to be very, very sophisticated and quite hard to spot. So always follow up with a phone call to your supplier if they're asking you to change bank details. And then building safety, which again we've touched on a bit before. How much are you going to plough into your estate when your budget is under a lot of pressure? This is another of the DfE's key risks. I think is the state of the school estate at the moment. So we seem to have historic underinvestment leading to properties that are becoming not fit for purpose. Yes, and then staffing recruitment. I think we've talked about. Shortage of teachers and recruitment is hard. So the DfE talks about recruiting 6,500 new teachers. Whether they'll manage is another question. But for you guys, what are you doing to recruit teachers? So how do you attract people to you? Do you have any strategies for retaining them? So do you do surveys? Finding out how people are feeling on an ongoing basis. And when people do leave, it's finding out why they've left and seeing if you can tackle that. I think is going to be key. And it's trying to find ways of keeping people around that isn't going to cost money at the moment. Slide, please.
So this brings us on to the Academy's accounts direction, and somewhat unsurprisingly, there's nothing really that new this year. That being said, there are some significant changes coming down the pipeline, and I will come back to that kind of once I've talked through the clarifications for this year. So kind of some clarifications on some key requirements, which is the Appendix 1. There's kind of a few wording changes there. So on the effectiveness of internal controls review, essentially there's a bit of information you need to put, I think it's into the trustees report, isn't it? Yeah, and there's a bit more detail maybe than what you should be writing there. A statement of regularity, propriety and compliance. Carly's kind of already touched on this about saying, maybe saying as far as funding permits, because of how questionable the funding is getting recently. And then there's some extra bits in the model accounts disclosures, kind of confirming how 16 to 19 funding should be disclosed, on things like agency arrangements, and about staff cost note and other employee benefits, and then long leasehold properties. Now, long leasehold properties, that is an interesting question. Previously, we all did it the same way, and that was all very well good. We took the valuation that the local authority gave us, and we said, thanks very much, we're going to depreciate over however many years, the rest of the lease usually. And that was all very nice and very lovely, but that's kind of not necessarily the only option anymore. There are 6 options now, of which I'm not going to go into great detail, but essentially we can start. There's now some options in the accounts direction for potentially taking other valuations. I mean, the fact, if in most cases this isn't going to be that effective, it's not going to affect most people because most people are not kind of converting schools at the moment. But naturally, if you're converting schools where you're kind of acquiring leasehold property, leasehold premises, schools, it might be worth a kind of discussion to see how you're going to value it. I suspect the correct answer will be how we've always done it, because that is probably the cheapest option. I would say, wouldn't you? Yeah. So that's. But there's other options, essentially including like surveyors and various other things. Now, the big thing coming down the pipeline is there's updates coming to FRS 102, which is the UK accounting kind of standards. And as such, that will have a knock-on effect to the charities' statement of recommended practice, which will undoubtedly then update the Academy's accounts direction. It really is a long way through. But we're not thinking that's going to come for another year or 2 yet. We think this will probably start affecting from the August 27 year end, don't we? And there's the big thing that's probably coming, that we definitely know is coming, is leases on the balance sheet. And this is not just your finance leases, this is your operating leases, and the fact that they need to be capitalised. Now, the annoying part with that is from your August 27, not only do you need to put the current year number in, you then also will need to disclose a comparative. Essentially, you're almost going to restate the 26 accounts to be dealing with the update for the 27 bulletin. Naturally, we're on hand to help with this. We're aware of what's coming and how it's going to be valued. So kind of from next spring. Yes. Will kind of be potentially available. So we'll be available to kind of start helping you to look at how we're going to value this and what we're going to have to include. Anything you want to add on that?
No, just to reiterate the fact that from around next spring or early part of the next calendar year, once the audit season has been and gone, we'll be offering projects to look at trust specific leases, basically all your operating leases that you have, details about them, and then basically get you ready for the disclosures that are going to be coming for the year ended August 27. But of course, as Tyler just said, there will be the prior year comparison required as well. Depending on your trust, this may be a relatively small job that you don't need our help for, and it also might be a particularly large job. And so, as I say, please do get in touch after the audit season and we'll be helping.
Great. Next slide, please, Nola. And this is a particularly interesting quote that we got from Simon Oxenham, who's the ISBL National Lead on School Finance, when he was speaking to us last week. And he said, from speaking to CFOs and business managers over the past 6 months, he said over 80% of them think they'll run out of money by the 25-26 year. That is scary to me. It really is scary. I'm sure there are many of you that feel very much that resonates with you, and you would find yourself amongst that 80%. I'd like to think we're all feeling very happy about the way school finances are, but I think this really sadly shows that something needs to change with funding. I'm hoping actually that shows that for those of you who are feeling it's a little bit on the tougher side, you really aren't alone. I think this is very much a nationwide problem now.
Actually, Tyler, just thinking about it in your capacity as a trustee, and thinking about reserves and how to better them, for want of a better word, by investing, given this issue. Yeah. In your capacity as a trustee, as I say, how are your trusts that you sit on the board of investing? Right.
It's interesting. My trusts are both very lucky. One is a single secondary school and the other one is a 4-school MAT. And they are both very lucky. The secondary school is a standalone single academy trust, and has historically done very, very well. We've been very, very lucky with staffing, to the point that we have very little agency costs. So, historically, we've always sat on good reserves and we tend to make surpluses most year. And I appreciate that's a very lucky position for us. And to be fair, my map that I sit on, we're also very lucky in a similar way, but also we had quite a lot of startup money. We do new schools, kind of new builds, and that's given us quite a lot of kind of capital that we're sat on, and our buildings are new, so they're not falling down, which is again very lucky. So actually, yes, we do have some significant money to invest, and actually it gives us some opportunity to do something with it. Now, neither of my trusts do anything exciting, I would say. We're not ultra risky. We're not going into the stock market and buying shares left, right and centre, but we do put some money on deposit, and that's done very carefully, managing kind of cash flows and expected cash flows and leaving ourselves, what is a solid buffer. But in the same way, we're able, in some cases, to lock money away for periods of time, say 3 months, which gives us good returns. And actually what we've been recently able to do is use some of that money that we've gained from that interest to actually kind of reinvest into the staff a little bit. We're doing a project in one of my mats. I'm sure if Sarah's here, she won't mind me saying, to basically we're letting the teachers eat lunch for free, which is being paid for by the interest we're gaining from the kind of reserves we have. So that's kind of, it's really worth, if you're sat on reserves of almost any amount that you can live without a portion of, it's really worth looking at the kind of bank rates on kind of deposit accounts. They're not risky in the remote slightest. It's worth looking at those and seeing kind of what you can get by locking some money away, possibly for 3 months if your cash flow permits. Watch your cash flow. Obviously, it's a bit seasonal with kind of various grants coming in every points of the year. But it's always worth having a look actually to see, is there £200,000 that we can stick on deposit? Because with interest rates being what they are, if you get £10,000 back, that's great. So yeah, it's really interesting to see what you can do with it.
It is just obviously also worth thinking about that if you do have a slightly longer term investment, then there may be a disclosure requirement in the balance sheet of the trust of the invest. So it will not just be classified as cash or cash at bank, not going into fixed asset investments possibly. So it's just something to think about. It's just a disclosure issue. As long as you're within the realms of what the ESFA allow in terms of investments, then there's no issue. It's just purely a disclosure issue to think about.
Yeah, I mean, I have, I don't know whether you have, I have seen trusts in the past once purchase some publicly listed shares in a share portfolio.
Yep.
Have you had experience of this?
I've seen that as well.
What's your thoughts on that?
But it tends to be endowment monies.
Yes.
Experience. And the other thing people are doing is they're using the services where you effectively it's a company that will manage investments for you. So you do your money laundering with them, then they can open up bank accounts with various banks.
And we actually have a partnership with one of those.
Yes. But it means that you can have some £50,000 in one bank account, £50,000 in another, and you're not worried about the financial services compensation scheme being exceeded. And because they've done the money laundering, you don't have to go through the rigmarole of opening each bank account independently.
Yes.
Which can work quite well if you have a lot to invest. I suspect this is one of the problems with funding, because when the government looks at the cash in the academy sector as a whole, of course, the schools that have lots of cash will skew the figures against the schools that don't have lots of cash.
Yeah.
But anyway.
Great. Cool. Thank you.
So the accounting officer did. Excellent. So the accounting officer has quite an important job. They are responsible for to Parliament for regularity, propriety, value for money, and the feasibility of any projects. So essentially, their job's all about the financial accountability and keeping the proper financial records. And the problem they have is if something goes wrong, they will end up, potentially having to justify what's happened to MPs, which I don't imagine will be much fun. So essentially, it's all about demonstrating they've done what I was intending to talk about is about how they go about demonstrating that they've fulfilled their job description. And essentially, the suggestion is they keep a file to evidence what they've looked at, and they've done any judgments they've taken and any conclusions they're reaching. So it's especially important, if things are changing within the trust. So if you're moving your catering in-house or outsourcing it, so it's changing that, what's going to change? What do you think will happen? Is this going to cost you a lot of money or not, for example? So, we've got review and management reporting documents, which is fine. So you give the accounting officer the management accounts, but does the accounting officer actually know what they're telling him? Or so does the accounting officer know what red flags to look out for? And then the other thing, obviously, that springs to mind is that actually complying with the ESFA's requirements, because the ESFA have set out in the trust handbook what they want the management accounts to look like. Obviously, reviewing trustees and governance minutes, one would expect the accounting officers to be in a lot of the trustee meetings, but I think keeping a record somewhere that easily to hand, so he can prove that he's been there, would be beneficial.
And actually, just come back to the management reporting documents, I think we're looking to do something, aren't we, for accounting officers to kind of explain what they're looking for?
And trustees.
And trustees.
Yeah.
Great.
Yes.
That's to come.
Yeah. So yes, ensuring the use of funds is compliant with the funding agreements, and this can be quite difficult. I remember one school getting picked up on buying shoes for a child without shoes on a cold day, and the DfE said, that's not compliant with the GAG, which is meant to be actually people premium, which is for educating the child, and obviously shoes are clothing the child, not educating them. So, it can get quite detailed, the judgments that are made. And then obviously we've been quite confident with the DfE, ESFA, so we've had 3 Dear Accounting Officer letters this year. And they need to show that they've seen them. First one was about the election, which was very exciting. Second one was about the main changes to the handbook, which again wasn't very exciting. And the third letter was about the ESFA closing, which again I don't think is particularly exciting. But yes, you need to demonstrate that they've seen them at least. So the school resource management self-assessment checklist. I don't know how seriously people take this. I know some people take it seriously, and others just see it as a bit of a tick box. But do encourage your head teachers to note down where there are deficiencies. What remedial action will be taken, or is intended to be taken, just to show that they are taking it seriously. So then, confirming compliance with the scheme of delegation and delegated authorities. So the theory is, if scheme of delegation isn't complied with, it's automatically irregular. So scheme of delegation was written by trustees, thinking theoretically about how they want things to work. Doesn't always meet real world requirements, and so often workarounds are found. So if you find you can't meet the scheme of delegation, well, should you be changing it? Which people seem reluctant to do, but I think in some cases it's probably quite a key thing to look at. Jump on to the next slide.
Come back to that.
We'll come back to the reserves policy. Yeah. Excellent. The list of musts in the handbook. So I don't know if people are aware, there's now actually an Excel document on the DfE website that you can download and gives your accounting officer, which lists out all the musts. And we're going to put, or we have put it in inflow for those people who are lucky enough to look at that. Essentially, the intention is to gauge, does the accounting officer actually know what they must do? Because the handbook is a fairly lengthy document, and actually remembering all the musts is not the easiest. So I think it's the Excel one is quite useful. It has it all in one place. It's quite quick to go through. Considering when any personal benefit has been derived from transactions, this is an interesting one as well. So this is all about the related parties. And what do you know about them? Obviously, we look at a lot of trustee declarations of interest. I noticed that very few trustees are married, almost no trustees have children, and most of them aren't directors. And you kind of think that trustees are basically filtering out the irrelevant related parties, and only informing academies of the ones that trustees see as relevant. And the problem, of course, is how can you ensure there's no personal benefit if you don't know who all of the related parties are. So do try and encourage your trustees to be open. Doesn't mean that all the related parties are published on the website. Obviously, it's only the relevant ones that are published. But I think the school does need to have a complete list, and you should be doing your own checks. I think as well. So, for example, look up directors' names on Companies House, and see what other interests they have, and obviously document that, put it in the file. Looking at tendering policies, if people aren't aware, there's a lot of information on school procurement on the DfE website again, and it's quite detailed. It's very good. So I won't go into it here, but yeah, do have a look at that if you haven't. We're in the work of the reporting accountants. That's both in external audit and internal scrutiny. So put the reports in the file. Have a copy of the management letter, have a copy of the internal scrutiny reports, and then note any actions that are going to be taken, or not, if the judgment is that the risk is not worth the remedial, the cost of dealing with it. And then looking at other sources of assurance. So have you ever done a benchmarking exercise? So the DfE obviously have the benchmarking website. So print off pages, put them in the file. And so you're benchmarking yourselves against other schools. So you might find that one of your metrics is quite out to schools around you. Do you understand why? Because when I've looked into these, there generally is a reason. Someone has made a decision which makes me look different, but it's planned. Yes,
It's fine.
And before we go on to questions, and we've seen a question in the chat, which we'll cover in a minute, we just wanted to cover again how we can help you. I'm sure many of you on this webinar are aware of what we do already, but just to emphasise a few things, we offer trustee training. So number one, we have a complimentary trustee conference once a year. This year it was in our offices. I'm sure we'll be doing the same next year around March time. We always invite a speaker from the National Governance Association, and then a couple of other speakers depending on the topics we want to cover. Actually, interestingly enough, we spoke about reserves and investing reserves, basically talking about what Ed was speaking about before, about how you may want to invest on one platform, via one platform, in different places. That was covered by our partners, or a speaker from our partners, at the conference this year. But we also offer specific trust training, and we can come out or do remote trustee training as you may need. Internal scrutiny, we've covered that already, and of course we can't be the internal scrutiny provider if we are your external auditor to the trust, but we can talk about it with you and look at areas you may want to cover. And of course, if we are not your external auditor, we can of course provide those internal scrutiny services. We don't just look at financial scrutiny, we can cover areas such as GDPR, health and safety, recruitment, cyber security, and other elements like that. So please do get in touch if you may think that's of interest. Annex G audits, just what it says on the tin, we offer that work as well as due diligence if you're thinking about expanding your MAT or indeed your SAT, and want us to look at some other schools that are due to convert, or academies that are either a SAT at the moment or coming out of another MAT, and may possibly join your trust, then we can help and look at those prospective schools or academies. We also have a VAT specialist and tax specialist team, particularly focused on the academy sector. So I know I touched a little bit about that earlier. please do feel free to get in touch if you have any questions. You'll know that if you're a client already, we run a free helpline service for any ad hoc queries, and that includes VAT and tax advice, so please get in touch. Setting up subsidiary companies, that may be also related to the VAT point that I spoke about earlier, and maybe not, but we can discuss that too. But BFROs, as they used to be called, or budget forecasting, we do a lot of work in that area. Sustainability consultancy as well, of course, given our B Corp status. And we've also, it's not actually on the slide, but we've done some work recently in the area of looking at central service provision as well. So if you're a MAT or you're thinking about forming a MAT, what areas could be centralised? Of course, the obvious areas such as finance, HR, legal areas, payroll, etc., would be the obvious areas to centralise. And we can look into the financial section a little bit more in a little bit more detail, and advise on how 2, 3, 4 schools in the trust could be better centralised in terms of your finance function. So that's some of the work we do, and also just talk in general about our experience about other work, other areas that may be typically centralised, so areas such as IT, estates management, governance, etc., and what you may want to do with other areas such as SEN, appraisal of academy leases, etc. So that's something that we're talking more about to our trusts at the moment. I think it might be a good idea to go to questions now.
Absolutely.
I can see there was one question that's come in on the chat from Kamla. Hello, Kamla, about stronger emphasis on the reserves policy. I'll just read it out in case anyone hasn't seen it. It actually ties into a question that we were sent in advance as well, so I'll hope to answer 2 in one go. So Kamla's question is, sorry I missed the stronger emphasis on the reserves policy. Would it be possible to advise what this requires, please? And then there's a couple of questions about childcare vouchers, which we'll cover in a minute. The question we were sent in is just talking about the 5% to 20% range that I spoke about earlier, and whether there is possible clawback if you fall outside of that range. So just to answer, hopefully, the 2 questions in one, in terms of the emphasis on reserves policy, there's nothing groundbreaking that's happened in the new ATH. What they've said is that the Trust must implement a suitable policy for holding reserves and explain this policy in the Trust annual report, including a clear plan for managing reserves. So they're not telling you what to do or what you must not do. It's still somewhat a grey area, which it's always been previously, I think. And we still have, as far as we are aware, the 5 to 20% threshold. And I dare say the Trust can make reference to that threshold that was originally referred to by the ESFA within your policy, within the Trustees report. So it's not something you can't mention, it's definitely something that you can say that you're keeping in mind. There was, of course, the Trust Reserves Good Practice Guide issued in November 23 as well. But all I can really say is keep in mind the fact that 90% of trusts are holding at least 5% of total income. That's really what you should be aiming for, and what the ESFA is likely to crack down more on in the future as funding tightens as well. Many choose, of course, to hold 1 month's salary costs or expenditure as a minimus as well. That's something that's not that's quite common in the sector, and something that the ESFA, as far as we know, wouldn't frown upon either. Just thinking about budget considerations and cash flow forecasts, just to tie into the reserves point, it's very useful now to separate out operational cash from monies held on trust, and as well as restricted reserves. So that's something that trust might think about when actually looking at reserves as well. Splitting out those 3 areas might be useful to focus the trustees' attention on what really you want to hold in your reserve, particularly, as I said, as funding is tightening. The second question, I don't know, Ed, if you want to...
Childcare vouchers and school lunches. So can childcare vouchers be used to pay for school lunches and trips? I think the short answer is no, but there is a potential workaround. And I think it all depends on how it's structured and paid for. So yeah, Cameron, could you send us more information, and we can have a quick look.
Deal with that one offline.
Yes, I think the basic answer is no. Yeah,
but there might be a chance.
there might be a chance. Yes.
Okay, we've got another one on EV schemes. If we're already in a scheme, can we continue without any approval? Yes, absolutely. As long as you're already in a scheme, you're good to go. Just no more new schemes.
So no more new people in
those schemes. So the people that are already in it, already driving around in their green cars, they're lovely. Have a great time. That's fine. Carry on with that. No new people, no new schemes. Do you want to take the next one on the
screen?
Yeah,
the next one's how do multi-academy trusts vary in size, and what experience do you have as a team at dealing with large maps? They do vary in size quite a lot. We were on a sector update conference last week, and I believe the largest trust currently is about 40, just circa 40 schools in the trust, something like that.
We're over 100.
They were covering over 100.
We're over 100
on a map. Covering
a single map is there's a map. The biggest UK's biggest map's over 100, I believe now.
Okay.
Or it's very close. We deal with.
Our largest trust that we deal with is about 17 or 18 schools in the trust.
Yeah. That being said, between us, we've got the experience dealing with maps of up to about 40, Edward. Yeah, would you say?
Yes.
So all of our trusts really vary somewhere between 1 and 17. So we have a real range, and you have to remember, despite there being potentially maybe 10 schools in a trust, if they're 10 primary schools, then financially that's going to be a much smaller trust than 10 secondary schools. So these are what are looking like really very large multi-academy trusts coming up and down the UK are often lots of primary schools, which are generally not that big. If they're 1 or 2 form entry, we're talking, then they're not going to be so significant maybe as those that are containing lots of, 1,500 pupil secondary schools. They get very large.
But actually, just an add-on to that question is what may be the optimal level of the size of the trust, which is something we get asked quite a lot. In my opinion, about 4 to 7 schools in the trust, I feel is optimal, because you still benefit from economies of scale in a lot of different areas that we can discuss in more detail without the need for geographical hubs, which we of course see in larger trusts, and then possibly the left arm not knowing what the right arm's doing and vice versa.
That's really interesting. There was some research done on this a few years ago, and the research essentially said economies of scale work until you get to about 10 schools, after which they start going back down again. And it didn't really specify very well whether there were 10 primaries or 10 secondaries. But to be fair, the government's old white paper used to say 10 schools as well. So around 10 probably. That being said, the whole way the academy system works is we don't really think is the way the government set it up. I think it was originally set up to be a secondary school and it's feeder primaries, and it's never really quite gone that way much anymore, but that's kind of by the by, I suppose.
One of our questions we were sent also in advance is asking us, are we going to be forced into a MATS? I presume that's come from the SAT, that question. And really it's in relation to what we've just been talking about. They seem to have been they have put a pause, on the white paper that was issued. If we were answering this question a couple of years ago, we would have all probably nodded our heads.
I think it's hard to say at the moment, wouldn't you? There for a long time it was if you got a bad Ofsted rating, it was almost certain that you'd be forced to convert. That being said, they're removing single word Ofsted ratings, so who knows what they're going to do there. We're not sure is a simple answer. I still personally think, I don't know about you two, I still personally think they will trend it towards maths. Because we're not seeing the SAT survive generally, especially not the primary SAT. So we still see secondary SAT survive.
A single primary school, I think, is probably not big enough anymore. Or they won't allow a primary to convert into an academy by itself. And I'm trying to help out a school that's run out of money, and they asked if they could join a MAT with one other primary school on the same site. And the DfE have said that 2 single primary schools is not big enough for a MAT anymore.
Yeah.
Having said that, can you be forced into a MAT? They, having run out of money, the option they were given is basically join a MAT. So if they decided to join a MAT, and I suspect if they hadn't decided to join a MAT, they would have been pushed into a MAT.
We also know, of course, that the conversion grants are now only open to groups of schools. So if you're in a group of 3 or more schools, you are able to access that conversion grant if you're joining a MAT, but you can't access that conversion grant on your own, even if you're joining a MAT. So we don't know what the new government are going to do yet, but this is, as it stands today, it's looking that there's still a shift towards wanting all SATs to join MATs, but there's no one being pushed at the moment.
I should think if you're a financially healthy SAT, you're with decent Ofsted, you'll still survive for the time being. And I should think for a fair few years to come.
Yeah.
I think those are all our questions that we've been sent.
Questions.
Thank you very much, everyone, for joining. I'm sorry we've run over by a couple of minutes. I hope you found it interesting. And as you'll be aware, the slides and recording will be sent to you all afterwards.
Thank you ever so much. Thanks for coming.